You guys have been clapping for everyone who's been coming on stage, but I think I'd like you to take some time to clap for yourselves because it's Saturday, it's the summer, and you chose to be here getting knowledge and expanding your businesses.
La plupart d'entre vous étaient en train d'acclamer pour des gens qui étaient sur le stage, mais je voudrais que vous puissiez acclamer pour vous-même parce que c'est samedi, les après-midi, et vous êtes ici.
And thank you to Emmanuel for such an amazing convention. It's very personal to me because I'm an immigrant myself, and I wanted to learn more about the African culture. I wanted to know more about some of the opportunities going on within the African community, and what a perfect opportunity to be here. So once again, thank you, Emmanuel. So yeah, let's get right to it. My name is Naveed Nabi. I had the pleasure of meeting Emmanuel at one of my conferences or one of my events about 2 months ago here in Dallas. My company is One Click Commercial Funding. I've been in commercial real estate about 3, going on 4 years. So there's plenty of professionals here, or maybe in the city, in the state, that have far more experience than I do. But we just want to add a little more flavor, new language to the industry, and work with some of the individuals that have unfortunately been neglected by some of the bigger lenders, bigger banks. So that's what I'm here to do, right? You guys will get a chance to know more about my business and how I work during my session, but just to give you a little bit of a background story on myself, as I mentioned, I'm an immigrant. I came from Afghanistan. My mom is a widow with 2 kids. So I feel like I share a lot of the stories that many of you share and how you guys became the professionals and the struggles that you had to go through in order to be where you're at today. And once we arrived, you know, the first day I arrived in the United States was September 23rd, 2001, 12 days after 9/11 from Afghanistan. So that was very, very interesting. And the typical story of having a struggle, my mom, you know, working 3 or 4 jobs at a time, working 18, 19 hours a day. Ultimately, it all intertwines with real estate because the moment she was able to get her first property, she pretty much just was able to not have to work as much and retire in 2016. So do everything you can, and my goal is to help you in the journey of real estate. And my last message before we get our amazing panelists here as well is that if my mom, who was a widow, 2 kids, $80 to her pocket when she came to the United States, no English education, can excel in real estate, why can't you? So some of the main questions I get is paperwork. What kind of paperwork do I need? But before I dive deep into it, I really want to tell you guys about why I'm involved in commercial real estate, why I'm even involved in real estate at all. Because as I mentioned earlier, I come from Afghanistan, and in my country, which I think a lot of you may connect with as well, is that owning your own real estate is more of a dream than it is a reality. Unless you're in the government, unless you're doing something that you're not supposed to, it's very, very rare for anyone to own real estate in Afghanistan, where I come from. There's the 2%, and then there's the 98% that are always looking to do more. So when I came to America, I finally had an opportunity to learn real estate and also give people the opportunity to get into real estate, because that's what America provides for us, is the ability to grow. You have your freedom of speech, you have your freedom of rights, and you have the freedom to real estate. So that's a little bit of why I do what I do. So let's get back into it. So today I'm gonna do a presentation in regards to a very common transaction that happens in my workplace, and that is somebody who wants to buy, let's say, a 20-unit apartment complex, right? So what is the paperwork that is involved in that? So it's not a residential transaction where you're buying your own home that you're gonna live with, called your primary residence, or just another home that you're just gonna rent out here and there. This is an actual commercial project. So by that I mean there's different paperwork that's involved. Some of you may know what is involved, so thank you for that, but for the others that don't, let's just give them the respect, and I'm gonna actually, you know, go dot every I, cross every T, so that way you guys can know more about this. So some of the main paperwork you're gonna need. You're gonna need your taxes in place. Why? Because in commercial real estate, it's not about what you're doing right now like it would be in your residential real estate. For example, your W-2s, your pay stubs, and your tax returns. How much money did you make last year? So that way you can make your mortgage. In commercial real estate, banks care about what you're gonna do after you acquire the property. How much are you projecting in your returns? How can you pay us back with your mortgage? What is the value of this property, called ARV, after repair value, if you decide to renovate the property, if you decide to add to it? So banks, the biggest difference between a bank that's thinking of commercial compared to a bank that's thinking of residential is what are you going to do with the property after you acquire it? So you're going to have your taxes in place for your LLC or incorporation that is going to be holding title. But if you've opened the LLC or incorporation just 2 weeks ago before acquiring this property, which is totally fine, you just need your own personal tax returns. Because the bank, once again, doesn't care about how much money you made mostly the last 2 years. They just want to know that you're not delinquent in your taxes, you don't owe the IRS money, and they care more about the fact that you have a proper plan in place for after acquiring the property. You're going to need the identification of all the principals of the LLC or incorporation. So that's anyone who is a 20% or above owner. It could be 2 people, 3 people, 5 people, 10 people, doesn't matter. So other than that, you're going to need your proof of down payment funds. One of my 2 favorite myths about commercial real estate is that you have to own residential real estate before getting into commercial real estate, which is absolutely not true. And I'll give you an example later on to why that's not true. And then the other myth is that you always have to put 20% or more down, which is absolutely not true. So I'm going to show you guys exactly how you can actually put 10% down on commercial real estate as long as it's for your own business, okay? And then other paperwork would just be, once again, it's very common. You just have to do your personal financial statement. And the personal financial statement is actually, it gives a grass idea to the bank on all your assets. It doesn't have to just be the money in the bank, because you can grab, funds from your stocks. You can grab funds from your retirement accounts. You can grab funds from cryptocurrency nowadays to be able to use as your down payment. So that's a part of your personal financial statement as well, and it will indicate some of your debts as well. So we can calculate the debt to income as well. And then last but not least, we would need P&Ls and balance sheets. We're not CPAs, but we talk one-on-one with your CPAs throughout the process, because our goal is to take care of you at the end of the day. So having communication with your CPA, having communication with your accountants is very normal in our industry, because we constantly need P&Ls and balance sheets. And some of the main differences between P&Ls and balance sheets are that the P&L is more on a quarterly basis, which some of my business owners may already recognize because you have to pay your quarterly taxes. But the balance sheet explains how you got to that P&L, because it has to balance out. And that could be on a month-to-month basis. Even sometimes when we get really itty-gritty, it could be on a week-to-week basis, depending on if it's the business that's going to be acquiring that commercial real estate is very cash-heavy, like a laundromat location or like a car wash. So balance sheets, P&Ls, keep in mind. Let's see. So now I have Esmeralda, my buyer. She wants to buy a 20-unit apartment complex, $5 million, and she has the money down. So, Esmeralda, what do you think are some of the paperwork that we would need in order to get this going? And let's say you've never owned an apartment complex before.
Okay. What I was writing now, because I'm not familiar with commercial. Well, now you got me. Because I was like, okay, writing down my notes, but about the commercial, I know that you were saying that you're going to need, let me see. Oh.
Do you think I would need any more paperwork based on what I told you here?
Probably not, because what I'm doing is a private,
That's fine. It's fine.
residential. So
Yeah.
I'm kind of pretty much new in all the commercial area.
Okay, that's fine. No, that's why I wanted to
But
pick
I'm
you
actually learning though.
Yeah. So anything that's involved with month-to-month rental coming in, you actually need something called a rent roll. Hotels are very popular for that, and multi-unit properties are very important for that. It's called
rent roll?
A rent roll, yes. It's a log that you have to get from the previous owner that'll measure the strength of each tenant in that location. Or for a hotel, it'll literally measure the strength of each room in that hotel. There's such things. So if this 20-unit apartment complex, let's just say, I had, once again, my presentation, so I'm just going to go off of numbers off the top of my head. Let's just even it out. Let's say there's 10 tenants in there that pay Section 8, right? Section 8, and then 10 tenants that are regular tenants. So can you tell me maybe some of the benefits of having a Section 8 tenant and some of the benefits of having just, your regular tenant?
I would say the benefit of having them is because the payment comes directly. So you don't have to worry about the
Clockwork.
the residents are gonna get behind on payment. So you're making
Clockwork.
sure they're getting your money.
The government's not late, right?
It's actually good. Sometimes they say
It's
no,
good.
but it's actually good. You get
It's
money.
good. You're right. It's good. But what are some of the disadvantages of having a Section 8 tenant? What are the disadvantages?
I don't know that.
Rents are about 20% below market. Yes. So if you're charging $2,000 per rent, the government's only going to be paying you about $1,600. That's the part of Section 8. It's got to be a little cheaper for them. So what are some of the benefits of having regular tenants?
One of the benefits of having the regular, it's because they are actually going to pay the market value price. And when the occupancy is high, it usually is always good due to the customer service. You can actually increase the rents. Even the apartment complex are now the nicest or updated.
That's right. And some of the disadvantages of having regular tenants will be because, they're not being backed by the government. So they could just say, I don't want to pay rent this month. And you have to now start dealing with that issue, right? So that's what you need to think about when you're looking over your rent roll. But guess who else is also examining your rent roll? The bank. The bank is also looking at that because they want to see how strong each tenant is. Because as I mentioned in my panel, getting $50,000 a month of rent from one tenant is strong and it's a good thing, but imagine getting $50,000 of rent from 20 different families, or in this case, 20 different families. Now the bank wants to know who's strong, who's weak, because there's always a weak link in the numbers. So here's something else that you'd want to pay attention to in your rent roll. What if you have a unit that is every year there's a new tenant coming in? Would you want to pay attention to that? Why would you want to pay attention to that?
You are getting new tenants.
Cha-ching. But also on the tenant side, maybe there's a plumbing issue in that unit. Maybe the AC constantly goes out. There's got to be a common denominator there somewhere, right? And that could be very, very normal for hotels as well. What if you have, certain units or certain floors that are just not generating the numbers they're supposed to generate compared to other floors, compared to other side units? You want to start paying attention to that as well, okay? Because the bank, once again, will also pay attention to that. So that's something that you might want to take a look at when you're looking at multi-unit properties. Now, another key item that I want you to pay attention to is called your net operating income. Everyone talks about ROI, right? ROI this, ROI that, ROI this. No one talks about NOI, net operating income. Your ROI is projected by your NOI. And that is, I remember one of the gentlemen, he said money coming in and money going out. So when you have commercial real estate, it's your net operating income that the bank looks at to determine if they're going to give you that loan. And this is how you measure it. You measure it by the income that's being produced by the commercial real estate, and you subtract it by the expenses that you have to pay on that real estate. A lot of people think of expenses on a property just as, mortgage. That's very normal on the residential end. And yeah, you may change a few locks here and there. You may change your AC every 5 years. But on a commercial unit, that is very common to do constantly. So if you guys want to write this down, some of your expenses on a commercial property are going to be your mortgage, of course, your insurance, and depending on the type of commercial properties you have, you can have other expenses like handyman. You need a handyman to be there constantly, so you don't want to deal with more headaches. Property management. I'm sure you don't want your tenants calling you directly. And last but not least, it could be like your trash, right? You have a hotel. I don't think, your people who are renting out your units are going to be bringing out their own trash. You have to pay for that kind of service as the owner. So that's going to be your expenses. What are going to be some of your incomes now on the other side? Let's think about the good part. A lot of my investors just think, hey, the rent coming in could be my income. But no, what if you charge for the parking lot? What if you charge for, you have a garage unit here, but you want to pay $50 a month for the parking structure? Please do so. Or in your hotels, charge for parking, charge for vending machines downstairs, charge for laundry. Once again, right? Fix a little laundry unit, because laundry units are very, very powerful for multi-unit properties. So that could be an income creator for you as well, not just the rent coming in. So in this project that we're working on, right? Let's say $5 million, 20-unit multi-unit property, and now your rent and all the other income coming in all together, let's just use whole numbers and say it's $50,000 a month, right? But your expenses are about $40,000 a month. So now your net operating income is going to be $10,000 a month. For some people, that's great money. For some people, it's not. That's for you to determine. But for the bank, if they see a negative net operating income, then of course it's going to be harder for them to lend on it, because they absolutely will not. So net operating income is something I want you to take advantage of. Second keyword, cap rate. Cap rate, cap rate, cap rate. That's your, let me ask you, Mr. Esmeralda, do you have an idea of what cap rate would be? Okay, that is how you project your rate of return. That is how you project your ROI. Because your cap rate will actually be determined by your net operating income divided by the current market value of the property. Cap rates are actually very different depending on the city you're at, the county you're at, the state that you're at. So they're different because, for example, to try to get something with a cap rate of, let's say, 4% in LA County right now, good luck. Good luck. But to try to get something with like a 4 or 5% cap rate here in Dallas, where it's still a little newer, is absolutely doable. Because the number one question that you're going to get from banks is, what do you project your cap rate to be? Because certain banks have a threshold on how much, on which cap rates they just won't lend on because it's just too risky. Like your LAs, like your New Yorks, San Franciscos. So a strong cap rate would be something in the 3% or higher. Okay? So it'll be in your 3% or higher. And I can already tell you right now that with the net operating income of, let's say, $120,000, because that'll be your net operating. Remember $10,000 a month, 12 months in a year? If you divide that by 5 million, what do you get? Let's do our math. You guys have your phones out, so anyone can say it. 120 divided by 5 million. That's a cap rate of 2.4%. Is that a good project for you to get involved in? No, it's less than 3, right? Less than 3. So always look at a project that'll give you a cap rate of at least, depending on the county as well, once again. If you can get a cap rate of 3% in LA, New York, San Francisco, you have a deal, jump on it right away. But if you can get a cap rate of, let's say, anything between 3 to 5% in Dallas and in less lucrative areas, I would look into that. But some clients have gotten lucky and they get cap rates of 7, 8%. But that's why the hedge funds, VCs, they spend a lot of market analysis on something like this to be able to do it. And that's pretty much it. You know, escrow process is pretty straightforward. Everyone has to get involved. It's very normal for a commercial project to take 3-4 months, unlike your residential project. But you got to have your papers in place too. You know, we only work as fast as you want us to. If I ask you for paperwork and it takes you 2 weeks to send me paperwork, then I can't move forward on that. Just keep in mind, an LOI from a bank is not the same thing as a pre-approval. A lot of people think it is. It's not. That's just a letter of intent. What that means is that based on what you're showing us on the initial paperwork, the bank is willing to move forward. But if you make a mistake throughout escrow, or if you change something up, or if you lied about some of the paperwork, because it's happened in the past, then the bank has absolute every right to either change the terms on you or just cancel the transaction. Keep that in mind. It's a teamwork. You have to keep everything in place. Dot all your I's, cross all your T's. And then last but not least, because I love, once again, I like getting my audience involved, so we'll do a lot of Q&A after this. One of my favorite types of loans, which some of you may have already taken advantage of, is your SBA 7A loan. That's where you can actually put about 10% down on a commercial property without having to put the 20 to 25% that's required. But there's a main requirement in regards to that. The cap limit on that is $5 million. So if you're getting a project for $10 million, let's just say you're getting a warehouse, Amazon-style warehouse. It costs $10 million, but it's for your own business. $5 million of that can come from the SBA. The rest can come from your conventional lenders. But the beauty behind that product is that as long as you're utilizing 51% of that unit for your own business, you can rent out the other 49%. Doctors do this all the time. They get a medical facility, multiple units. Ever seen, your eye doctor, you walk through a bunch of offices and then you get to theirs, or your dentist, or your plastic surgeon. They do this all the time. They take advantage of this SBA 7A loan. There's a lot of more requirements than your conventional types of loans because, of course, the SBA wants to know everything except for your blood type. But as long as you have that, you're good. Closing costs are also a little less. And that's what I would have you guys look into because the property has to be utilized for your business, a primary source of your business. 51%. So if there's, let's just use whole numbers again. If this property is 10,000 square feet, as long as 5,100 square feet, they're literally going to come in and you have to draw them a map of how you're going to utilize this property. As long as 5,100 square feet are utilized for your own business, you can rent out the other 49%, and we can use that income as part of your DTI. So, and you don't even have to have tenants in there before we close. They just projected 75% of that rental could be utilized towards your DTI. The rates are not fixed on that. Very important for me to let you know. However, they can last up to 25 years, which is a lot easier than having to constantly refinance from 12-month, 36-month loans or 5/1 ARMs and things like that. And that's about it. So I would love to have you guys ask me questions. I'm done talking. If you guys have any questions, let me know. I'm here for you.
If you have any questions, I have the microphone here. I can pass it to you so you can ask your questions.
Any scenarios you want to go over?
Yeah. Send I got one and
if a company is applying, is there a minimum time frame that they have to be established before you're willing to work with them on a loan?
My favorite companies to work with are the ones that are starting off right now.
Oh, let's go.
Today.
Thank you.
Today. Because as long as you have a proper business plan in place, remember, commercial real estate is about what you're planning on doing with the property after you acquire it, unlike residential. So if you have a proper business plan in place, absolutely, because remember the banks right now, the banks are eager to lend their money out, especially to intelligent, strategic business owners. Because if you can get approved in this kind of economy, then you're the cream of the crop, and they're going to develop that relationship with you going forward because they know your business is only bound to expand, go up, and they want to be that lender for you for life. So if they can help you in the beginning, they're hoping you're going to call them back when you're ready to expand. So absolutely. Thank you.
we got another one back here.
Okay, you had mentioned the cap rate
Yes.
was, you said in 3%.
Yes.
In like, I think you said California is good, but in Texas, we need to go like a little higher.
Yes, yeah, absolutely.
And can you kind of elaborate on that a little
Yeah,
bit?
because the cap rate is determined by your net operating income and the current market value, right? Divided by the current market value. So when you have such expensive properties, and I'm not even talking about good-looking properties. As we mentioned earlier, there was a 2,000 square foot property in California for $830,000. You can't change that current market value number, right? So if properties are constantly coming in really high, but you're barely making any rents or you're barely making any income off of it, then it's harder for you to get a higher cap rate. But if a property is on the median side, let's just say, for example, here in Texas, a property is $450,000 and you're still able to generate, $2,000 a month of income from that entire property, then that's easier for you to get a higher cap rate on it because the property is not so expensive. It's that bottom line that you're dividing it by. So, and then your net operating income, it's less costly for you to have properties in areas that are not as costly, right? So in LA, just having insurance on your home is, I have a good friend of mine, Verna here, who's a big realtor in the LA County. Just insurance on your property is going to be $600-700. But here in Texas, insurance may be a little different. I know you have your storms and tornadoes and things like that, but just the costs of everything that eats up your net operating income, that's why your cap rates tend to be lower on those very, very big cities right now. Anyone else?
Any other question? There is another one down here.
So for my understanding, I know that for the first home buyers, they do have like a the down payment system. So
Down payment assistance,
down
yes.
payment system. So for first home, for the first people who trying to purchase the commercial, there's also a specific program that we can be able to recommend.
Well, yeah, the SBA 7A loan would be actually very good for that as well, right? So because with the residential side, you have the FHA, which allows you to put 3.5% down rather than the initial 5% to 10%, right? So that's why the SBA, it's their job to make sure that the economy goes round, and the only way the economy goes round is by businesses making sure that they can pay their rents. So that's why they allow you to only put up to 10% down on the property rather than your initial 20, 25, possibly even 30% like another bank would. See, the way the SBA works is that they're guaranteeing 90% of that loan. So if you default or if you go bankrupt or God forbid something happens, right, to the business, then the SBA has a pool of funds that they'll pay the bank back with instead of you. So that's why they can guarantee it, and that's why there's so much more paperwork involved, because they have to make sure that you're not going to be doing that anytime soon. So that would be a part of like a down payment assistance program from the SBA. Thank you. Anyone else? All right.
Any other questions?
Scenarios.
And Naveed is still around here, and his business cards are available, and he's willing to get with you on a phone call to explain to you if you have some more questions to help you. He said one of his missions here is to help you get into real estate. So he's going to do everything he can so that you can get into it. You know, all the things that we discussed earlier is that sometimes is the lack of information that is stopping us from doing the things that we're supposed to do. So I encourage you, if you have questions, like basic questions, now he's a great guy. He will tell you the ABCs of commercial real estate, at least to help you to get prepared, to know what type of paperwork you need. If you want to get into it now, it's the best time. If you want to do it a year from now, at least you are ready. At least you know what you need to bring to the table, and to just speed up that process. You don't want him to ask you for a document and then you have to consult your grandmother to know where she put the paperwork. You know, at least you have all that paperwork with you, and when he's asking for them, you are giving him the information. And one thing I didn't know that you could own commercial real estate before you have any residential real estate.
100%.
And this is great. This is great. That means that you can still pay your rent at your apartment and have commercial real estate that is paying your rent for you.
You can write off your rent from your apartment.
That too. So he'll give you some other tips that I will not endorse them, but that's him. All right, that's him. We'll give you those tips, and so you set up dollar. We also give you the tips so you can live a life tax free. Who doesn't want that?
Yeah.
You know, you wonder how Mr. Trump went for 17 years without paying a dime in taxes. He created jobs, and you can create jobs too. It's not too complicated, all right? And the government rewards you for doing that. You just have to know the information and have the information. So I encourage you, something that Vindra mentioned here. Most of the times we come to these conferences, it's all great, we get pumped up, we go back home, we're excited, and then do nothing.
Yes.
Now, if you do that, you're just as good as a person who stayed at home and was watching the NFL or the NBA, all of them on vacation right now, but whatever they were watching at home, right? So we want you to take action on this. Actually establish a plan. By the time you get home, write down the names of the people that you need to contact. When are you going to contact them? What questions you have to them. You got to have a plan of actions. If you don't have a plan of action, you're not going to execute on your plans, all right? We just want to make sure that you really get everything out of this conference. You showed up here, it's Saturday afternoon, I'd rather be home sleeping right now, but we're here, all right? Let's take advantage of it.
Yeah, just to finish it off, thank you so much for this, man. Thank you. I wish you were saying all this in French. It just sounds so much better. It really does. Here's a primary example of what I meant about that whole SBA loan. So I don't like to dive too deep into my previous clients' lifestyles, but just brief. He's a plastic surgeon out of Miami, big time. He probably had like a 1,200 square foot little office. He started doing podcasts. He started getting in TV shows, and now he was getting at least 15 to 20 people walking through his doors every single day. It was not possible for him to take care of all those clients at once. This guy's never owned his home. He's an immigrant from Cuba. He tried to buy a house a few years ago, and it was just a complete mess because he was self-employed, didn't report taxes enough, which I understand why, and he was just shut down. He was a referral for me from a friend of mine in Miami when I lived there, and he really liked this office unit that he found. It's about 5,000 square feet, so almost 4 times the size of what he currently has, and he can actually take care of all the clients now that he's able to help, because he helps Miss Cuba, Miss Colombia, all these big time names. So he wanted to buy it. I talked to him. He's never owned his property. He's renting his condo. But we were able to do it. Seriously, we were able to do it with an SBA loan because he's using at least 51% of that office for his own business. He's going to rent out 1 unit to, I believe, somebody who does, I don't know what it was, eyelashes or something. And then now he could call himself an owner of a medical facility. 10% down, $1.2 million property. It's definitely doable. The guy barely speaks a word of English, but you can do it. So it's possible. It's the lack of knowledge, and we are here to help you guys out. So let me know if you guys need anything. If you guys want to write down my phone number, it's my direct cell. It's 818-300-8634. And my email is my first name, Naveed, Naveed, at click, CLICK, commercial funding.com. Thank you very much for being here, guys. I really do appreciate it.
Ladies and gentlemen, let's give it up for Naveed as he's coming off the stage.